This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of July 27th through the 31st. Charles Rotblood here once again to outline some of what he expects to see in this look at the week ahead. As far as earnings are concerned, we've got, 750 companies reporting in total, 144 in the S&P 500. Are investors beginning to move their focus away from the financials at this point?
Well, they're going to this week simply because we're seeing a shift. Last week, we had a lot of financial companies actually release results. I think investors really weren't focused on the financials in particular. They were actually just focused on the overall earnings picture. And by and large, the numbers we've seen so far are showing that analysts were just way too pessimistic. 76% of all companies within the S&P 500 that have reported through Friday evening have topped expectations. And anytime you see that large a number, it's about 4.8 surprises for every miss. It's clear that the bar was set too low. In a lot of cases, what we're seeing are companies beating because they did a better job controlling costs, they did a better job controlling inventory, or maybe some other unusual items in there. As the case with the financials, clearly benefited from TARP and the other programs the Fed made available to them.
And that's what some people would argue, is that because the bar was set way too low to begin with, that anything is going to look good at this point.
Yeah, absolutely. And I think what people really want, but we haven't really seen the reaction in the market to, but the big question is, what are companies saying, going forward? And it's been mixed. Some companies are actually saying they do expect business to get a little bit better. Some companies are saying we have no visibility, no signs that things are, changing. Microsoft was interesting because they got a lot of news from missing estimates. And if you read through their transcript, it really wasn't bad. It wasn't rosy and overly optimistic, but they basically came out and said, we think a bottom in terms of corporate spending and IT being cut has been reached. We're not sure when corporate spending is going to rebound, particularly in a small, medium-sized business, but they did seem to suggest that a bottom had been set. So that was kind of a good watermark right there where, okay, we don't really expect things to get worse, but then we're not sure when things are going to get better. And so you're kind of seeing, and that's probably a good mix between what we're seeing across the board, is that companies are starting to get a sense that maybe things are bottoming out, and that's a good sign. Doesn't necessarily mean it's a reason to get overly optimistic and start buying stocks and think that the future is going to be bright, because the one thing people need to understand, if you look at GDP, if you go back, it's really from the start of this year and you look through to December 31st, 2010, we're really not going to have any growth, maybe a very small growth. But by and large, when you look at the drop in the first quarter GDP, we'll get second quarter GDP, the advanced estimate at the end of this month, we're expecting a 1.5% drop. And then if you look at what's forecast in terms of growth over the next 6 quarters, it's really going to bring us up to about break even, a little bit above it, but that's not a sign of recovery. That definitely isn't getting back to boom times. It's just kind of getting back to where we were before the hole really got deep.
So can we even ask at this point whether corporate earnings are keeping up with stock prices?
Well, they're not, but stock prices are right now definitely looking ahead. There's an expectation that corporate earnings will be better in the future. And it's important to realize that even if GDP stays relatively flat, we could see an increase in corporate earnings simply because if things start leveling off, we'll start seeing companies continue to cut costs. That will pay dividends down the road if they continue to keep expenses in line. Obviously, there's a fine balance between cutting too much and where you have to add back people, which raises your expenses, but you need to keep up with business. So I do think overall it's going to be an industry by industry case, and we're going to see some industries come back sooner than other ones. And it's definitely a situation where people are going to have to continue to be selective about what companies they invest in and really what industries they're looking at.
All right. One thing on the docket that you are going to be paying strict attention to this week is a big Treasury auction.
Yes, we're going to have a record Treasury auctions this week, $115 billion, and that's not including the very short-term notes they're auctioning off as well. This is 2, 5, 7 years, plus some inflation-adjusted treasuries, the tips. So record amount of debt. And when you look at everything the Obama administration is doing, and this is not a political comment, but they're spending a lot of money, and that requires government to do some record auctions. And obviously, when you look down the road, 2011, 2012, inflation starts becoming a question mark. Bernanke's addressed it. He says the Fed's aware of it. They're willing to take whatever actions is necessary. The question is, can they act in time? I don't know. But I will say to people, if you're looking at rates right now and thinking they're going to stay at this level, very mistaken. We're going to see rates increase. It's not a question of if, it's a question of when. And I should add, as I say this, in Zacks ETF Trader, I am short the treasuries right now.
It's going to be interesting to see how many takers we have for this record auction and just who those takers are.
You know, it will be interesting. When they did the then record auctions in June, we actually had very strong demand. A lot of people stepped up to the plate. So the question is, will we still see the strong demand? And it is questionable how it's going to happen this week. We'll start seeing auctions today, Monday, July 27th, as we record this. It'll be the early part of the week. You know, last time there was demand, though, and I think that needs to be noted. But I think if you look at the long-term outlook for treasuries and the long-term outlook for interest rates, it's only one direction, and that's up.
All right. And there are other items on the docket that Charles brings your attention to in this current week that you'll want to take note of, other reports coming out, and he also outlines a couple of companies that could be reporting some positive surprises and at least one that could be reporting a negative surprise to the downside. Read all about it, as they say, at Zacks.com's homepage. This particular text piece is featured in the featured story section at the top of the homepage, as well as, once again, next to Charles' picture near the bottom of the homepage. So you can't miss this writing. With Charles Rotblatt, I'm Terry Ruffalo.